Welcome back to the Malaysia Money Matters Show. It's February 28th, 2025, and we've got a ton to cover today.
We do everything from bank profits and potential privatization all the way to AI chips.
It's wild how all of these stories are actually connected in some way. But let's dive into the Malaysian company news first. What do you think?
Sounds good. Let's jump right in.
Okay, so let's start with Public Bank. They had a pretty amazing year.
They did. Analysts were expecting good things, but Public Bank actually exceeded those profit forecasts by 15%.
15%, that's huge.
Yeah, it translates to an extra RM 2.5 billion added to their bottom line.
Wow. In a global market that's feeling a little unstable, that kind of performance is seriously impressive.
And that's exactly why some analysts are calling Public Bank a safe haven.
Safe haven, huh? Interesting. But are there any downsides to Public Bank that we should be thinking about?
Well, that's a smart question, because no investment is ever completely without risk. But Public Bank's strength lies in its conservative approach. They have a good handle on their loan portfolio, which means they're not taking on a lot of risky debt. And they're bringing in strong income from things besides just lending, like fees and commissions.
So diversification is key for them.
Exactly.
And what about those dividends? Everyone's talking about how good they are.
Right. CGS is forecasting a 5.1% dividend yield for Public Bank in FY 2025.
That's pretty nice. Definitely something to watch. Okay, let's shift gears to Genting Plantations. Their share price just jumped to a 2-month high.
Yeah, that was after they announced a special dividend. Palm oil prices have been strong lately, so they're riding that wave.
They are, but is that sustainable? I'm seeing some mixed opinions from analysts. Some are bullish, others are more cautious.
Yeah, you're right. There's definitely some debate. MIDF recommends a buy rating because they're confident in Genting Plantations' stable profit margins, and their plan to expand their mature harvesting areas is promising too.
Okay, so they see continued growth.
Yeah, but then you have CGS urging caution.
Why is that?
Well, they're pointing to potential challenges in Genting Plantations' downstream operations.
Downstream. What does that mean?
Basically, it's the processing and refining of the palm oil, so any problems there could impact their profitability.
That's a good point. So it's not just about the palm oil itself, it's about the whole process.
Right, it's all connected.
Okay, so Genting Plantations seems to be doing well, but their parent company, Genting BHD, just reported their first quarterly loss in 2 years. What's going on there?
Well, it seems to be a mix of things. Higher finance costs took a bite out of their profits. They had to write down the value of some assets because of impairment losses, and some of their joint ventures and associates are underperforming.
So some internal issues they need to work out. But are they optimistic about the future, at least?
Actually, yeah. Genting says they are optimistic because the regional gaming market is recovering. And they're also seeing growth in international tourism.
Interesting. So they're hoping those trends will help them recover. Okay, let's move on to Seng Consolidated. They just announced a huge increase in their net profit. A 4-fold increase in 4Q FY 2024.
I know. Their plantation and property divisions were the stars of the show. Strong palm oil prices, like we talked about, and a pretty resilient Malaysian property market really helped them out.
So good news for them, but it seems like their different divisions are facing kind of different outlooks.
Yeah, good catch. While palm oil and property are doing well, their building materials division is facing some challenges. They're relying on overseas demand, and with all the global uncertainty, that's a bit risky.
So within the same company, you have some parts doing great and others not so much.
Yeah, it's interesting. It shows why it's so important to look at the individual parts of a company and not just the overall numbers.
Good point. Okay, up next is IHH Healthcare. They recorded slightly higher profits even with those rising costs everyone's facing. It seems like the demand for healthcare is just super strong.
Yeah, that's definitely a factor. But what's really impressive is their EBITDA.
EBITDA. Remind me what that is again.
Earnings before interest, taxes, depreciation, and amortization.
Right.
It shows their core profitability, and it increased a ton, like 33% year on year.
33%. Wow. What's driving that kind of growth?
It's a mix of things. More patients, managing costs strategically, and focusing on the higher margin services. They also seem pretty confident that the demand for healthcare will keep growing because they're planning to add almost 4,000 new beds in the next 4 years.
Wow, that's a huge investment. Okay, let's switch gears to K&M Group. They've been in a tough spot financially, and they're trying to restructure their debt. What's the latest there?
Well, they sold their German unit, Deutsche K&M. That's a big step towards reducing their debt.
Okay, this is good news for them.
Yeah. They were also hoping to sell their Italian unit, Hudson Italiana, but that didn't go as planned.
What happened?
The Italian government actually stepped in and blocked the sale. They said it was because of strategic concerns. It just shows how complicated international business can be.
It sure does. It's a good reminder that you never know what's going to happen. Speaking of things going well, KSL Holdings just announced record high annual profits for the second year in a row.
I know. They're on a roll. Their 4Q FY 2024 revenue jumped by a whopping 45%, mostly thanks to how well they're doing in the property sector.
It sounds like they're optimistic about the future of the Malaysian property market then.
Yeah, it seems like they are. They're pointing to things like domestic spending being strong and tourism picking back up. Of course, there are those global uncertainties and inflation, but they seem confident they can handle it.
I hope they're right. Okay, on to Magnum. They also posted a really strong profit performance, with their 4Q FY 2024 net profit up 44% year-on-year.
Yeah, it's largely because of lower prize payouts.
So more money for Magnum, but less for the players.
Well, yeah, but Magnum is facing challenges of its own, like illegal operator.
Oh, right.
And they're hoping the government will crack down on those illegal activities so it's a fair playing field.
Makes sense. Okay, let's talk about Malaysia Smelting Corp next. Their net profit more than tripled in 4Q FY 2024.
They are riding the wave of those high tin prices. It's really boosted their earnings. And they're sharing that wealth with their shareholders.
Oh, how so?
They're giving a total dividend payout of 31 cents per share for the whole year.
Not bad. Are they doing anything else to make the most of these good times?
They're focusing on becoming more efficient, like they're closing their older Butterworth plant and consolidating their operations to save money in the long run.
That's smart. Okay, let's look at the automotive sector. MAA is reporting a 27% drop in auto sales for January 2025. That sounds kind of worrying.
It does, but they're saying it's mostly because of the Chinese New Year holidays. Fewer working days means fewer people buying cars. They think sales will bounce back in February.
So just a temporary blip then.
Hopefully. Now let's talk about Nationgate. They're crushing it. Record high net profit and revenue for 4Q FY 2024. Their revenue surged by almost 18 times.
18 times. That's unbelievable. What's behind those crazy numbers?
It's the AI boom. They're assembling AI servers for NVIDIA. That business is exploding. And they're also benefiting from companies moving their manufacturing out of China.
It's amazing how they've positioned themselves perfectly to take advantage of all these global changes. What are they saying about the future?
They're very optimistic. They think advancements in AI, the growing demand for data centers here in Malaysia, and their ability to attract international clients will all lead to continued growth.
It sounds like they have a bright future. All right, let's move on to OSK Holdings. They just proposed a 1-for-2 bonus issue for their shareholders.
That's awesome. It basically means shareholders get free shares, which is always great. And it comes right after a strong performance, too. Their 4Q FY 2024 net profit jumped 51%, mostly because of their stake in RHB Bank.
Speaking of RHB Bank, they also had a fantastic quarter. Their net profit increased over 42%.
Yep, higher net interest income, and they're setting aside less money to cover potential loan losses, which is always a good sign.
Are they rewarding their shareholders for this success?
Definitely. They just announced a record high annual dividend payout for FY 2024, and they're putting a new 3-year plan into action called Progress 27.
Progress 27. Interesting name. What's that all about?
It's all about digital transformation and increasing their profits even more.
So they're not just sitting back and relaxing, they're looking to the future.
Exactly. They want to stay ahead of the curve.
Makes sense. Okay, now let's talk about a company that's been going through some rough times. Sepure Energy. They've got a ton of debt, but there's finally some good news for them.
Yeah, their creditors just approved their debt restructuring plan, which is a big deal. This will help them deal with that massive RM 10.8 billion debt they've got and hopefully get them back on track.
Wow, that's a lot of debt.
It is.
For those of us who don't deal with these kinds of financial terms every day, what exactly does debt restructuring mean?
So basically, it means they're renegotiating the terms of their debt with the people they owe money to. They might get lower interest rates, more time to pay it back, or maybe even have some of their debt forgiven. It just makes their debt more manageable,
Oh, okay, that makes sense. So it's complicated, but overall it's a good thing for Sepure Energy.
Yeah, exactly. It gives them a fighting chance to recover. Now let's move on to Time.com. Their shares are doing great. They hit a 6-month high after announcing a special dividend.
That's always nice to hear.
Yeah, it's pretty interesting, though, because their core net profit actually dropped by 40% quarter on quarter.
Really? So why the special dividend then?
Well, even with that drop, they still managed a dividend payout ratio of 274%.
274%, that's huge.
Yeah, it means they're paying out more in dividends than they actually made in profits. And Maybank IB is predicting a 100% payout going forward, which could mean some pretty good yields for investors.
Wow, it seems like they're putting a lot of emphasis on rewarding their shareholders. Okay, now let's talk about Magenta. Their CEO recently addressed those rumors about the company going private.
He did, and it sounds like he thinks the market might be undervaluing Magenta. He was talking about how strong the company's fundamentals are, their international growth, and their solid financials. He thinks they're worth more than their current share price shows.
So he's basically saying they deserve better.
Yeah, pretty much. He suggested that there might be a better outcome for shareholders, whether that's staying public or going private.
That's pretty bold.
Hmm.
It'll be interesting to see what happens. Magenta also has some exciting news about a new partnership.
Yeah, they've teamed up with Singapore-listed Guacoland to develop properties in Iskandar Puteri.
Iskandar Puteri, that's becoming a popular spot, right?
It is. This partnership brings together Sunrise's big land bank in the region with Guacoland's expertise in building high-quality properties.
It sounds like a good match.
They're also looking into a ferry service between Iskandar Puteri and Singapore, which could be really interesting.
A ferry service, how would that help?
Well, it would connect these two major economic centers directly, making it easier for people to travel back and forth and making it easier for businesses to operate across borders too.
Oh, that makes a lot of sense. It could really attract more investment to Iskandar Puteri.
Yeah, it could really boost the area.
Okay, I think we've covered a lot of ground already. We've talked about so many different companies, and it's amazing how active the Malaysian market is. There's so much going on.
It is. There's a lot going on in the Malaysian market, but that's what makes it so exciting.
It does. Now let's broaden our view a little bit and see what's happening internationally.
Okay, let's dive into the global news and see how it might affect things here in Malaysia.
Lead the way.
So let's start with those Asian markets. Remember President Trump's tariff plans?
Oh yeah, those are back.
Seems like it. Trump 2.0 and all. Anyway, those tariff plans are causing some concerns, and Asian currencies and stocks have been declining.
Yeah, those trade wars can really shake things up. It feels like we're back in 2019 all over again.
Right. You mentioned the Malaysian ringgit declining, the South Korean won, and the Thai baht are also weakening against the US dollar.
Yeah, I saw that. I guess if those tariffs do go up, it'll make goods from South Korea and Thailand more expensive for U.S. buyers. That can't be good for their economies.
Exactly. And remember, it's not just about direct trade with the U.S. These countries are all part of these big global supply chains.
Oh, right. So disruptions in one place can cause problems everywhere else.
Exactly. It's a domino effect.
Okay, makes sense. What else is going on?
Well, let's switch gears to China. They're doing something pretty interesting. They're encouraging their banks to lend more money to what they're calling traditional industries, like steel, for example.
Steel. That's interesting. I thought China was all about high-tech industries these days,
Yeah.
like AI and electric cars.
They are, but they're also realizing that those traditional industries are still really important to their economy. They still employ tons of people and contribute a lot to GDP. It's all about finding that balance, I guess.
Right. Supporting the old while building up the new. Makes sense.
Exactly. Okay, now let's move to a region where things are, well, a little tense. Taiwan and China. Taiwan has reported a surge in Chinese military activity. Naturally, that's causing some concern.
Yeah, for sure.
Yeah.
That's a delicate situation. And then you've got the U.S. saying they would intervene if China attacks Taiwan. Adds another layer of complexity to an already complex situation.
It does. It's a tricky situation for the U.S. They're trying to deter China without making things worse, you know?
Yeah, I get it. It's a tough spot to be in.
For sure. Okay, speaking of tricky situations, remember the whole AI chip war thing?
Oh, yeah, that's still going on.
It is. And Microsoft is now asking the U.S. government to ease the export restrictions on AI chips to U.S. allies.
Really, what's their reasoning there?
Well, they're worried that the restrictions are actually hurting the U.S. They're saying that by limiting access to these chips, the U.S. is basically giving China a chance to catch up in the AI race.
So trying to contain China is actually hurting U.S. innovation.
That's what they're arguing. It's tough because you have national security concerns, but you also want to stay ahead in technology.
Right. It's a balancing act for sure. Now, on a related note, I've been hearing some concerns about a slowdown in data center spending globally. How do you think that could impact the AI industry?
It's a good question, and it's definitely something to watch. I mean, developing and using AI takes a ton of computing power, and data centers provide that power. So if companies start cutting back on data center spending, it could slow down everything.
So it's not just about the chips themselves, it's about the whole system.
Exactly. Plus, don't forget, China is investing a lot in its own AI capabilities. Companies like DeepSeek are making huge progress, and they're not as reliant on U.S. tech as other countries.
Right, so the competition is heating up from all sides. Okay, let's circle back to President Trump and those tariffs. All the back and forth on tariffs targeting Canada, Mexico, and the EU is making it hard for companies to plan. It seems like nobody knows what's going to happen.
Exactly. It's chaos. Trying to run a business when the rules keep changing is almost impossible. Businesses need to know what the rules are so they can make smart decisions.
And it's not just businesses, right? Consumers also end up paying more for imported goods when there are tariffs, which isn't good for anyone.
Absolutely. And then you have the potential for retaliatory tariffs from the EU and other countries. It could spiral out of control pretty quickly.
Yeah, it could turn into a big mess. It really shows how important open communication and predictable trade policies are.
Okay.
Well, that was a lot to take in. It's incredible how much is happening on the international stage.
It is, and all of these things can impact Malaysia in different ways. So how do you think these global events could affect our local companies and the overall market here?
Well, it's interesting, right? Because a lot of what we talked about today, those Malaysian companies, they're tied to those global trends. Like Nationgate, they're doing so well because of the whole AI boom, which is being driven by these big international tech companies.
Yeah, exactly. If that AI boom slows down, if those big tech companies start struggling, well, that could hurt Nationgate.
Right, it's all connected. But then you have companies like Public Bank. They're more, the steady ones. They're doing well even with all the global uncertainty.
Yeah, they're like a rock in a stormy sea. But even Public Bank, they're not totally immune to those global forces. Like if those trade wars cause a big economic slowdown, well, that could hurt them too.
It really is all connected, isn't it?
Mm.
It's amazing how one thing can impact another, even if they seem totally separate.
It is, and I think that's the biggest takeaway for our listeners today. The Malaysian market, it's not isolated. It's part of this huge global system. And what happens in one part of the world, it can definitely have an effect here.
Yeah, that's a really good point. So it's exciting to see Malaysian companies doing well, innovating, growing, all of that. But we also need to be smart, right? We can't ignore those risks, especially the geopolitical ones. Things like the U.S.-China trade tensions, what's happening in Taiwan, all of that.
I agree. It's all about balance. Recognizing those opportunities, but also being aware of the potential problems. That's why we do this show. We want to help our listeners understand all of this so they can make good decisions with their investments.
Exactly. Knowledge is power, as they say. The more you understand, the better off you'll be. So, if you enjoyed today's deep dive and want to stay up to date on everything happening in the Malaysian market, make sure to subscribe to the Malaysia Money Matters podcast. We'll keep bringing you the news and analysis to help you navigate this crazy, exciting world of investing.
Happy investing.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.